Hey y'all, I am recording this in Austin, Texas. I came in here 2 days ago. For any of you who know me, you know that I rarely, not only do I rarely get on the highway, but I rarely go to airports and get on airplanes, and I actually did that this week, so I'm in Austin. And that's why I started this conversation off with y'all. So Austin's pretty cool, except of course that it's surrounded by Texas on all sides. Heading back this evening, my flight has already been delayed an hour, and my flight out here, we had to do a stop in Salt Lake City because someone on the plane had a medical issue, and then they ran out of oxygen, and then they forgot how to reboot the airplane. So a very short flight turned into a very long flight, and I finally got in at 3 a.m. But there was a lot of volatility with me getting here, and today's conversation with you is very similar to that. Hey everybody, this is RC Peck, and this is my weekend podcast. And the theme for this weekend is gold volatility. Gold, along with a few other things, have been very volatile for sure the last few years, but over the last month it's been incredibly volatile. And I want to show you two specific price charts and kind of tell you the takeaway of what I see going on right now. The first price chart I want to show you is GDX. That's a gold mining exchange traded fund. And if you see this, that top line that is angling down, that line has been in place for 3 years. And as you can look at the screen, the price of GDX is kind of bumping up against that. And the question is, can it break above that, or is it going to get bounced off again and come back down? Right now, it is really fighting hard to break above that downward trending trend line. But then you have that red line, which is the 200-day moving average, which is, GDX is trying to figure out, is that 200-day going to support my move higher, or is it going to be the ceiling and push me lower? And then you see that horizontal line, which is another potential support or resistance line. So with gold mining, there's three pretty big lines that are coming together. The 200-day moving average is big, and a 3-year downtrending trend line is also pretty big. So that's why we've gotten this move over the last 2 or 3 weeks of really just chopping back and forth. Now, before it chopped back and forth, GDX moved up the fastest it's ever moved up in a 3-week period. So in the history of planet Earth, GDX had never moved up as fast as it moved up. Interesting thing about that was there was no increase in volume. So lots of things going on with GDX. Now what drives GDX is really this thing right here, which we call gold. This is GLD. As you can see here, the downward trending line on there, gold bounced right off of and is heading lower and has moved right through the 200-day moving average. So this kind of downward trending channel that got established almost 2 years ago, gold is still in that, and gold is looking for a better reason to break out into the upside. And according at least to the last 2 weeks, it has not found that reason. It was hoping to find that reason maybe in the Swiss franc depegging. That helped a little bit, but then it didn't. It was maybe looking for more destabilization with QE, whatever, in Europe. That didn't seem to do it. So as of right now, or the recording of this, gold is not liking what's going on, and it's had to digest the information over the last couple weeks. And as of right now, it's digesting it and it is moving back down. I will continue to watch it. As you've heard me say before, there's a 50-50 chance that we could see gold at $1,000 before it starts its new long-term finishing out that 18-year cycle. But I will be looking at it. And if you hear noise in the background, it's because I'm actually recording this outside where there's a little quiet, but there's a pretty large highway a little bit away, so you might hear that car noise. So really the takeaway is be patient. Be patient, whether it's about gold or whether it's about an investment, your own obvious trend, market probability. Be patient, still let the strategy do all the lifting for you, but allow yourself to be patient, especially when there's currency volatility, which there's an incredible amount of currency volatility, and when we have all this money printing going on. And those two go together. as the US dollar has been raising and going up and interest rates have been falling and other countries need to adjust their currency balances and their interest rates. There's really a lot of fighting going on right now between all these sovereign countries, and we are seeing the results of it. So be patient, and many times it's doing nothing and sitting still that is what makes investors the most for their portfolio. Hey everybody, this is just another step towards securing your future and your portfolio. Until next time, this is RC Peck.